Sri Gurukripa's Institute of Management.
May 23, Group 1 accounts. Overall review I will tell later. We will just go some by some. All the questions have been asked. We will see. Comprehensive coverage. All the questions have been covered. First question. Actually, it is foundation level question. Just we have to compute the months, how many months the PPE has been used, and for that months we have to provide a depreciation. That's it. So foundation level question. In Inter, you can relate this with a single entry also. Single entry, similar adjustment is already there. And in AS10 PPE also, you can relate this. So one new point, exchange is there. Exchange is nothing but one old machinery is going out and one new machinery is coming in. So there also we have to compute how many months that machinery has been used, and for that you have to provide depreciation. So the full answer PDF file I have given in the description. So by clicking that link, you can see the full PDF. So second question, AS11 question. As such, this question is not there. However, this sum is there in final SFM, Strategic Financial Management. But the common sense question, it is no more difficult. So immediately, if you pay a cash discount, 1% will be there. You have to use a spot rate. After 6 months, now you have to add interest and you have to use forward rate. Finally, whichever is beneficial, that you have to choose. So simple question only, but already this question is not there in book. And AS12 government grants, here also straightforward question. Cost reduction method, deferred income method, what is the adjustment? If it is in the nature of promoter contribution, what is the adjustment? And in part C, at the end of the year, the grant is refunded. So there is two possibilities. Before providing depreciation or after providing depreciation, that two cases will emerge. So I have solved in two cases also. Then AS16 borrowing cost, already there are two sums. That two sums have been combined here. Two adjustments have been taken from two different sums. First, there are three general borrowings, so you have to compute the capitalization rate. Then the fund spent is more than the borrowed amount. So we have to compute the fund utilized from the borrowings in the proportion of fund spent. So in that ratio, you have to compute. Already the sum is there. So two adjustments have been taken from two different questions. Hire purchase, same question, already there, but one small adjustment, one small difference is already we are having annual repayment. Here we are having half yearly repayment. So what we have to do, very simple, 8% interest is there, divided by 2. So 4% for half yearly period, that you have to compute. So if you are stuck with that adjustment, you cannot proceed. Otherwise, you can easily proceed. So 2A and in question 6 also the same concept is asked again, half yearly payment. So if you know that concept, you can solve both the sums. Otherwise, you cannot attend both the sums. And here, third installment have been paid, but fourth installment could not be paid. So fourth installment at the end of second year, because it is half yearly, correct? So after 2 years, goods have been repossessed. That we have to see. And the investment account, as usual, same question. There is no specific adjustments. Departmental accounts. Already this question have been asked recently. So here also the same question is repeated, but one specific point here is normally last department, there will not be any direct expenses. So the proportionate percentage of transfer we will not compute in third department. Only in second department we will compute. In this question, direct expenses is there in department C also. So one more adjustment we have to give. So those who are conceptually very clear with the stock budget, they can identify this adjustment and they would have solved this. Otherwise, it would be a big problem. So, but that adjustment is relevant only for stock budget. Other items you can directly attend. Then 3A single entry, straightforward question, nothing. 4A schedule 3 question. Here also the question seems to be very lengthy, but please remember only they are asking P&L. Balance sheet is not required. So This point is also relevant. Miscellaneous receipt. Normally we will show it as other income, but here it represents it is proceeds received from sale of PP. So we have to compute the profit on sale, and only the profit we have to include. Others we should not. Other portion we should not include. The board of directors declared a dividend. This is also relevant only for balance sheet. Profit and loss account not relevant. We will not show this as an expenses here. It is only an appropriation of profit. And land is revalued. That is also only relevant for balance sheet. So there are more information relating to balance sheet is given. We have to pick the only relevant information. For the cash flow statement, actually the question seems to be very lengthy, but please see here they are asking only cash flow from operating activity. That is the important point. So only cash flow from operating activity is asked, but all the information have been given. So you have to pick the relevant information and answer. But anyway, for your understanding purpose, I have given entire cash flow statement. You can just go through this. And pre-incorporation profit also, nothing, no specific adjustments, straightly all the adjustments individually it is given, just we have to consolidate that. That's it. And here they are also asking the extract of balance sheet. So extract of balance sheet, we have to prepare equity and liabilities, shareholders fund, reserves and surplus, note number 2. Actually, you have to give the breakup also. They are asking extract of balance sheet also. 5B insurance claim, straightforward question. 5C branch accounts. This is also seems to be big question, but please see, only they are asking only conversion of trial balance only they are asking, nothing beyond that. And one more adjustment, it is already there in the book, salary outstanding. What we have to do, salaries accounted are two outstanding salaries. One adjustment entry we have to pass, then only we have to proceed. So outstanding salary is a liability, we have to convert using closing rate. Salary is an expenses, so you have to convert using average rate. That should be very careful. And AS1, as such, there is no specific question here, but these principles are already there in AS1. But many of the students would have not come across this principle. So first question, AS deviation. Accounting standard, if deviated, statutory auditor has to comment on that. Then second point, substance over form. Already this question is there in group 2 AS4 also this question will come. Here the concept is substance over form. So consideration has been given, possession transferred, legal formalities are pending. So we have to account it as a sale in current year itself. Then third point, cash basis. They have not disclosed that. So fundamental accounting assumption, if not followed, we have to specifically disclose. That point is there. Then fourth point, significant accounting policy should be disclosed in the financial statement, not in the director's report. So this is all the principles already there. So as such, this type of question, it is not there. And hire purchase already we have told that same half yearly installment. Same concept has been tested again. 6C debenture redemption. Debenture redemption reserve investment. How much that amount has not been given. So already one requirement is there. 15% of the face value of debentures to be redeemed. We have to maintain. So based on that, you have to proceed. So first you have to compute the investment amount. On that interest you have to compute. Interest received, we have to pass journal entry, transfer to P&L, then redemption. For that we have to pass journal entry. And it is not given that whether it is listed company or unlisted company. For listed company, DRR requirement is not there. For unlisted company, 10% DRR we have to create. That point also we have to take care. And question number 6B, conceptual framework, straightforward. Already this question is there. And 6E, bonus. Very simple question, but many students would think that sir, ratio is not given. Sir, we have to be very careful. Ratio same as partly paid up shares. Partly paid up shares, what is the ratio? 6 paid up, correct? So 4 rupees bonus will be given for 6 paid up. So ratio is 4:6 or 2:3. So bonus ratio we have to take as 2:3. Accordingly, we have to answer. So now what is the overall opinion of this question paper is, they have asked decently, but it seems to be very more unrequired, irrelevant information is there. Students have to pick the relevant information. So from that perspective, from students' perspective, in that examination hall, in that environment, it will be somewhat lengthy only.
Sri Gurukripa's Institute of Management.